welcome to Traders Corner. As always, I'm joined by Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, we'll start off talking about the S&P 500 this evening. In the last couple of shows, we've actually been discussing the Dow, and we looked at an island reversal pattern on the Dow last week, but you're reverting to the S&P 500, and perhaps maybe just tie the two together to start.
Yes, that's right. I think I'm going to carry on looking back at the S&P 500 now as opposed to the Dow, but it was just interesting to look at the Dow because of the Dow at 20,000 and all the headlines and what have you, but I think we've thrashed that to death now, so it's enough. And the S&P 500 is a far broader measure of the US markets and a better index to look at, actually, because the Dow only consists of 30 stocks, and it's a price-weighted index, whereas the S&P 500 is a market cap-weighted index. Anyway, look, you'll find that the technical structures of the two do often mimic each other quite closely in any case. Nevertheless, let's go back to what we looked at last week, which was that island reversal that you referred to. And you can see on the chart over here that there is that island reversal that we discussed, and that occurs where you have a piece of trade that effectively is broken away from the rest of the body of trade. It's separated by a gap on either side. So you can see a gap on the left over there and a gap on the right. And that often does indicate a near-term top, and it can be a trend reversal pattern. Not always, but sometimes. Now, the thing is, what we've seen in the last week now is that the S&P 500 has actually moved up again, and it's effectively gone up and closed the gap that was on the right-hand side of that island reversal. So it kind of negates the whole thing now. So, you know, it was nevertheless an interesting thing to look at. I think from an education point of view, hopefully people now know what an island reversal is. But I'm not going to get stuck on that idea, because I think that as things stand right now, when I look at this S&P 500 chart, it still does look now as if it might have the potential to still pop a little bit higher. It's difficult to say, though, because, you know, we sit in a situation now where I think the S&P 500's gone, if I'm not wrong, I think it's 29 days in a row without more than a 1% movement on the day, and 80 days without a 1% pullback on a single day. So it's a very, very narrow-ranging kind of a market from a day-to-day perspective, and not much volatility to play with. So, you know, it's grinding its way higher at the moment. It does still look as if it might have the potential to actually push a little bit higher when I look at that chart. And also this positive reverse divergence over there, which occurs when you get your stochastic oscillator making a lower low, and yet the price makes a higher low at the same time. That is positive reverse divergence that occurs within a rising trend, and usually that does signal further upside to come.
Okay. What about the Top 40 index? You know, if we look at our own, take it back to our own market, and we did sketch out the possibility of a head and shoulders pattern last week.
Yes, that's right. So last week we introduced something new, which is a sort of to watch this week section of the show. And this is the slide that we showed last week. We said monitor this Top 40 index, because it looked as if there was a potential for a right shoulder of a head and shoulder structure to form, and that it might then start to turn to the downside. So if we fast forward 1 week now, this is the live chart as we sit today. And what you can see is that certainly that head and shoulders pattern has formed quite classically over there, as we expected, and it's now broken below the neckline of that structure, which comes in at about 45,700, and that break of the neckline there points to a potential downside target of 44,500, which corresponds more or less with the 200-day moving average on the Top 40 index. So still potential for a little bit more downside here. And also, if you look at that level of 44,500, you just sort of cast your eye across to the left there, you'll notice that there are a couple of previous highs which come in at around about that same level. So there is a lot of support at 44,500, which we can monitor in the event of a pullback.
Garth, you said it was a trade to watch, but you didn't actually enact a trade for the portfolio. And,
no.
And even though it's sort of played out quite classically, why were you averse to taking a position?
Yeah, because I did say that the possibility is that if it reversed up here, I might look to get short. And quite frankly, there were definitely opportunities to get short up at that level. I just didn't. And I should have. I really should have, because it would have been quite a nice opportunity to do that. And you would have put a stop loss above the highest point of the head of that head and shoulder structure. Yeah, and I look back now and I said it does actually seem like it was fairly obvious. And we even alluded to it last week.
Yeah, but the market it's tricky, and it has been for a while. And I get the sense that people aren't quite sure which direction it's likely to head towards.
Very much so. You know, I see it on my subscription service with the level of interaction with clients and the amount of commentary and general chatter amongst clients, and it's very, very dull at the moment. There's not a lot of discussion happening. There is almost just a seems like a mass withdrawal out of the market at the moment, where a lot of participants are just sitting on the sidelines and not quite sure what to make of these markets, not quite sure what to make of Donald Trump, not quite sure what to make of Jacob Zuma and the State of the Nation address, and whether he's going to do a cabinet reshuffle. There's all this uncertainty out there at the moment, and it's translating into sort of somewhat inactive market from a bigger picture perspective, as I'm seeing it.
Yeah. Well, I mean, Jacob Zuma has a lot to do with our currency, and that is something that you'd like to discuss, is the rand-dollar exchange rate, because it has been remarkably strong. So notwithstanding all these rumors of a cabinet reshuffle, the rand is just trending firmer. It
certainly is. If you look at this chart now, this is the rand-dollar exchange rate it's basically over a 1-year period. So you can see over to the left here, that was in December and January of 2016, where we had Nene Gate, and obviously we were all panicking at that stage. But that was a clear blowout on the currency. Now, what's happened since then is the rand has been trending stronger inside this downward sloping channel for the whole of the last year. And where we sit right now is that the rand dollar is basically testing a very critical technical level here at 13 Rand 20. And you can see how it's tested that level a number of times over the last 6 or 7 months. And what is very clearly evident here is this pattern of falling highs over there. And usually, we've spoken about this on the show before, but when you get a structure like that, where you have this flat support level, bounces, but every time it bounces, it makes a lower high. Usually you'll find that that structure will actually resolve to the downside. In other words, strictly speaking, I think that this rand looks like it's poised to go stronger. If it can break through 13 Rand 20, that would be a significant technical break for the rand, which would then probably point to a move down to 12 Rand 50 or maybe even 12 Rand 20, basically towards the bottom of this bigger channel structure that we're looking at over here. And it's going to depend a lot on, I think, we need to obviously monitor the State of the Nation address this Thursday. But also then moving on from that, we've got the budget speech on the 22nd of February. And there's all these rumors around that Jacob Zuma is going to do a cabinet reshuffle and that he's going to effectively fire those ministers that tried to pass a motion of no confidence in him at the NEC meeting in November last year. And so I think somebody like Derek Hanekom should probably open the newspaper to start looking for a new job pretty soon, because he championed that thing. But the big question is whether Finance Minister Pravin Gordhan is going to be safe or not. And if there are lots of rumors around that he's going to be replaced either by Nkosazana Dlamini Zuma or otherwise by Brian Molefe, which is maybe a little bit of a long shot. But in any case, the market doesn't seem to be taking this with much worry at the moment, because the rand continues to move stronger. And if there was real concern about Pravin Gordhan being fired, then I think the rand would be acting a lot more nervously. So we'll need to see. Obviously, I don't have a crystal ball, and I don't have a hotline to Jacob Zuma to ask him what he's going to do. But my sense is that if he does leave Pravin Gordhan alone, then you're going to probably find this rand go stronger.
If he, on the other hand, because I don't think anyone really knows what goes on in Jacob Zuma's inner most moments, if he does sack Pravin Gordhan, would then the reaction be quite explosive because it's not expected in the market? Would you then see quite a blowout?
I think you would. I mean, we saw what happened last year, end of 2015, when Nene Gate happened, and you saw how the rand blew out on the back of that decision. So I think you would probably find a similar sort of a reaction if he did fire Finance Minister Pravin Gordhan now. But the big debate is whether he has the political capital left to make a move like that. And obviously we can sit and debate it till we're blue in the face. We just don't know. We'll have to wait and see how he reacts.
Yeah. Well, we live in interesting times. Garth, something to watch this week. We introduced it last week, and you're not making any trades for the portfolio, but BHP Billiton, and you're looking at it both in London and on the JSE. I mean, what's the difference?
Well, obviously the one is listed here, it trades in rands, and then the other one is listed in London, it trades in pounds. But the primary listing is the one in pounds. But we're going to look at them both. The reason being, remember that we're trading locally, and we've also got an offshore component to our portfolio this year as well. So, if a trade does line up here, there's a possibility we could either choose to do it here or we could choose to do it in London if we wanted to. So I'm going to look first at the rand chart listed on the JSE here in South Africa. And here you can see a 1-year chart of BHP Billiton, and you can see that there's a very well-established upward trend over here, joining all those previous lows on this stock. Now, that upward trend comes in at around about 220 Rand per share, and you can see that that level also corresponds with this horizontal support level at 220 Rand there as well. So we need to monitor that, I think, in the week or the weeks ahead. If it does come down to 220 and it reverses up from that level, I think that could potentially line up quite a nice buying opportunity for BHP Billiton locally. And then if we turn our attention to the listing in London, you'll see that there's a fairly similar looking structure here. It's interesting to note that it's still a strong chart here in London, notwithstanding the fact that the pound has been weak, and that you would expect that there's a fair amount of currency adjustment that needs to take place because of the sharp devaluation in the pound over the last year or so. But nevertheless, there's still a pretty similar technical structure evident here. If you go back to January last year, notice how this upward trend comes in on the pound chart of BHP Billiton. It fits very well with all those previous lows on the way through this upward trend. And there you have your upward trend support coming in at £13.20. And that would also correspond with the flush below your 50-day moving average, which is that red line over there. So I think you'll see the two charts do tie in together quite nicely. Yes. If we got a move down to £13.20 and a reversal up from there, likelihood is that it would also correspond with a reversal up from 220 Rand in South Africa. So we'll be certainly watching this as a potential area to put on a trade for BHP Billiton in the week or in the weeks ahead, maybe.
I mean, is this an obvious trade or an obvious kind of strategy to pursue for shares that have dual listings? So you'll see how they might react one day or, in the morning, say, whenever it starts, and I guess it'll be South Africa first. Would you expect the shares to track each other directly in London and on the JSE?
Yes, they do, because there's an arbitrage between the two. Okay. So you should find that you take the share price of BHP Billiton in London, divide it by the Rand-Pound exchange rate, and you should get back to whatever the price is on the South African market here. If there was a discrepancy between the two, then that introduces an arbitrage opportunity where you could effectively short the stock on one exchange and buy it on the other, and then wait for the gap to normalize and then unwind that trade to realize a risk-free profit. So, and the markets are very efficient. They're computerized algorithms that exploit these opportunities all the time. So you'll find that there's a very, very tight correlation between the price of Billiton in London and the price in Johannesburg.
So not an obvious opportunity for a retail investor? I mean, it's not.
No, look, I mean, in the olden days, there were those types of opportunities were quite clearly evident at times, but because of the advent of algorithmic trading systems that look to exploit these opportunities much faster than any human being could ever hope to, you'll find that as a retail private client type of trader, you're wasting your time trying to explore those arbitrage opportunities, because they get taken out too quickly by the algorithms.
Yeah. Well, BHP Billiton is coming out with results. I think it's on the 21st of February, so it's something to watch. Yeah. Garth, what does the portfolio look like then? Presumably not too much movement.
No, there's not. It's the same as last week, effectively. We've got no positions on at the moment. So we've done 2 trades this year. We had an MTN trade, which we stopped out last week for a small loss. And I'm glad we stopped it out, because it's subsequently gone lower. So our risk management worked well for us there.
So even though you were expressing regret this time last week, ultimately you've saved yourself from yourself, possibly.
Correct. Look, I mean, we've always said that part of the reason why this show is successful and why we've made money over the years is because we never let our losses get out of hand. I like to think I'm a reasonably good stock picker, but I do make mistakes. And the key thing is, when I make those mistakes, I don't want to lose too much. Lose as little as possible when you're wrong, and try and maximize your profits when you're right.
Yeah. Okay, so portfolio relatively flat. Yeah. And then just to end off with, people can... Well, there's a course coming up, and also how to subscribe to a weekly alert.
Yes, this week, Thursday, I've got an Understanding CFDs course in the evening of the 9th of February, and this Saturday coming up, I'm doing a high probability trading course on the 11th of February. There is still space available on both of those courses, so anyone that's interested, please email me, garth@traderscorner.co.za for the details. And then, yes, lastly, if you want to subscribe to our free weekly email, where we send it out at lunchtime on a Tuesday, basically giving you a heads up on what's coming up on the show for the week, go to traderscorner.co.za. You'll see a link in the middle of the page there to click for our free weekly email. Sign up, subscribe, and then you'll get a heads up as to what we'll be discussing each week.
Great. Garth, we'll leave it there. Thanks as always for joining us. Garth McKenzie is founder and editor of Traders Corner.